In this on this page, we look at the development of the short-term market versus the long-term market, and what we've selected here is, as you can see on the top here, market trends is the page, and then we've gone to short versus long. We can also here, for good sake order, look at schedule reliability as another topic of interest for a lot of our customers. But what we're looking at here is the long-term market, but not the full sort of long-term market in terms of any valid contract per today, but only contracts that's settled and has a validity from date within the last 3 months of today. So that means that we look at long-term contracts that are fairly new in order to see how has the market moved with that data set compared to the last 3 months in this example to begin with. Now, I want to switch that to the past 1 year, because I know a lot of shippers are now in their sort of tender period, right? Especially big European corporations will be there, and American companies are fast sort of closing in on that period as we go into Q1. And this view here is particularly interesting for those because it allows them to see high-level movements year over year, because a lot of shippers go with a 12-month fixed rate validity or a 12-month rate with a floating bunker. And what you sort of need to know before going into tender is what has happened in the market. And the way I think that you can start effectively looking at this is by going to this page in the platform, and here you will see what I've selected as global trends. Our users will always have the opportunity to populate this list with the trades that they use, so it will be very customized to the users. But here's a global trends overview that allows us to have a quick conversation on this. And here you can see some of the biggest corridors, top left, Far East Main to North European main ports, where you see in orange the short-term rate as per today for a 40-foot standard dry. We can do, of course, 20-footer or whatever we want to look at, but you can see that year over year, the short-term market as per today on this corridor is up 62%, and the long-term market is up 25%. And then if I quickly sort of go down with my eyes here, I can see that Far East Main to US East Coast is up 84, and West Coast is up 157. And now you can see a lot of the long-term contracts sort of following suit as well, but we're looking at last year's development. So same point in time, 12 months ago compared to today. And I want to also flag South America East Coast here. There's that substantial cost increase. Now, if I switch this overview here to last 3 months, because I want to see what has happened more recently on the market, then I get a slightly different picture. Now I can see that there's less of an increase on the short-term market for a few of these corridors. If you again here look at US East and West Coast, you can see that now it's lower sort of 10 digits increases still. So they're massive increases, but this one, the 25% was 157%. And this changes the picture from Far East Main to South America East Coast, where you can see that the majority of the increase is actually happened in the last few months alone, right? And now you also see that there's a significant bigger portion of the long-term market increases that have happened over the last few months. So this tells me that year over year, for Trans-Pacific eastbound and Asia Europe or Far East main ports to Europe, the short-term market has increased significantly, but more recently there's been more of an increase on the short-term, long-term market in relative terms.